Yo, what is up, guys? It's Hunter here back at you with another valuable video. We're going to be talking about something powerful today. I'm going to be talking about institutional levels, how they can help you have an extra confluence in the market, get you from point A to point B. Potentially, your setting up at these levels. Like I said, having that extra confluence doesn't hurt to have an extra confluence, because this is all about putting dots together and then execution, right? And then these levels, guys, these are institutional levels. This is where central banks, institutions, this is where they book price. And you can see how they react to these levels because it's easy, right? So before I get started, what I want you to do is I want you to like and subscribe, right? That allows me and Joe to get pumped up and keep doing this, right? Because we know that we're reaching people and we're helping people. Okay. Go in the comment section below on the videos and put in the comment section on what video you want shot. We'll shoot it, something you're struggling with, right? Go follow us on Instagram, right? Where you'll reach us there faster. You can put, message me. We'll have a chat, drop some charts in there. I'll grade them, things like that. Also, we're on Facebook. Go follow us on Facebook. Guys, we also have a Telegram, a free Telegram where I'm dropping tips and tricks. I'm dropping charts, something that you can keep, put into a folder and be like, look, Hunter did this chart markup. I'm going to reference it. As soon as another trade setup like that comes about, boom, right? And also, guys, we are having a Black Friday sale. We are literally half 50% off of our academy. Go to our website and check that out. Let's get started. Let's go. Okay, now let me share my screen. Okay, guys, I'm going to, I have the EMAs off. Okay, I'll show you something at the end that you could potentially have. It's an indicator. Okay, um, I'll show you at the end. You can go get it. It's free and it will allow you to put these lines on your chart without you having to do it yourself. Okay, now, and you can tweak the settings on how you want, things like that. Now, I'm going to erase this. Let's delete that. Let's delete this line. Let's delete this line. No, okay, that's my line. Okay, cool. All right, guys, I'm going to show you a trade tip. Now, remember, everything is about the first thing you want to know when you come to the market is timing. You want to know timing. Where am I at the market? What time is it? You know what I'm saying? Because you guys know that this market is all about timing. When the timing shows, they manipulate price and they leave their footprint. That's the reason why timing is so important, right? But I want to show you a trade setup right here. It was pure moved off news to grab liquidity and also what was at this level, okay? And your trade setup. So you will look right here. So what do we have? You can clearly see that we're moving down, right? Making lower highs. Okay. So we got into what? Asian, London, New York was all sitting here consolidating. What we want to see. That's what we want to see. And the reason why I would be inclined to take a trade outside my timing zone is because I knew what this was about. Okay. I think this was CPI or some FOMC news at 1 o'clock. So you can see that look what they did. And they showed me their footprint. Right? That's the reason why I was able to be like, look, okay, this is it. I'm going to take the trade. They accumulated, right? Got a bunch of traders trapped in this little box. I'm not trading inside the box. I let them do their thing. When news hit, what did they do? They sent people the wrong way. They induced people to buy, right? As soon as they took this liquidity out, you can see here all of this liquidity above Asia. They took that liquidity out, and look what happened. Boom. They gave me my trade setup right there, shark fin, okay, in the direction of the trend. Perfect. Okay. Now I'm going to go chase something. I'm going to be chasing, I'm going to be chasing that low. You can see here. Okay. I'm going to be chasing this low here. You can see that. I'm going to be chasing these these low hanging fruit lows, okay, that the market made. These two here. Yesterday's low, this low before it took off. Okay. Also, there's probably more on the higher time frame that we could be potentially go back to imbalance on the higher time frame, stuff like that. Okay. So, but I want you to pay attention to this. Check this out. You're going to be paying attention to look at this here. You're going to be looking at a level, okay, parameters, okay, 5000, okay, you can see that this price stopped and reacted to a level at 1.15500, which is a 50 level, okay, is a 50 level. All right. Now, look how it reacted. That's a confluence. They sent that you have everything. You have your shark fin. You got, you understood that news, you're outside your timing, but you understood news, what it done. It took liquidity. It's at an institutional level. Now what? Now let's break down. It's just an extra confluence, guys. Now let's break down on that trade setup. Oh, I can't stand that when it happens. Okay. Let's see. It's back here. Right. Where are you at? There you are. Okay. So you can see here that it started to form what we want to see. So I'm going to go to the 1 minute. Okay. Now look at this M pattern. Okay. So you can see that the news sent it, created the left leg, comes down, created the right leg, takes out left leg. We send price down. Right. Perfect. Takes out, has a market structure shift right here, breaks the low. We pull back into what? An imbalance. Imbalance is big imbalance to the left, right? Hitting the breaker right here. So you can see that this breaker was holding price down. So there's our entry, okay? There's our entry right here. Pow, okay? And then there's our stop loss, okay? And then where's our take profit? Pow. So you can see here, we got a 37 pip stop loss for 79 pips, okay? I want you to pay attention to what that level is. Okay. Look at this level. Look how price reacted. I'm trying to show you these levels. Look how price reacted if I pull this up. Okay. Look what the price is. 1.14500. Okay. That's a 50 level. Okay. It's a 50 level. So that right there, you can see how price rested on top of it, and then we ran right through it. And you can also see once we ran through it, look where price reacted. Once we ran all the way through, that was 1.450. Look what price did when we ran all the way through. Okay. Once we got down to what? A 1 point. I'm gonna try to nail it. I ain't gotta go and change it. But look at the price. 1.14000. Look where it stopped. Look where it reacted to. Okay. These are institutional levels, guys. You can see how we pinged off of that level and reacted. Okay. And then we started to consolidate, get back into consolidation, right? So you can pretty much map this out. You can see that we're at, I'm going to put it up to 1.15000. You can see there. Look how price, if I move over, look how price reacts to that level, guys. Look how price reacts. Pow, 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 pow. It's standing on that level. Okay, even though this was consolidation. So what I mean by this is like when you get your other conferences, when you know your direction, right? You know your timing. You know that you just took out liquidity. You know you got your shark fin. Now you can look at, okay, what am I at an institutional level? Because typically, what do? They run through it or they'll set up on it and bounce off of it, right? And you can see how price reacts to these levels, right? Reaction, 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 okay, with the setup. Now, you could have been like entry, partial, 30 pip partial, okay, 80 pip partial. I come down here, I take my full profit. That's 130 pips at the institutional level. You can do that. You can set that. Or you can be like, okay, my entry's here. I take out low hanging fruit, which is liquidity. Now I'm going to take, 90% off the trade. I'm going to let the rest ride to the next institutional level, which would be an extra 50 pips for you, right? So that's what also I integrate with my trading plan is to understand where this price is setting up, at what level. Is it an institutional level? Great. If it just makes it a sweeter trade. It makes it a sweeter trade, right? So we'll you can even revert back to the previous day. Look at the previous day. Same thing. Okay. Boom. We're moving down. We have Asian. We stop on it high. Okay. London created equal highs. Boom. Stop on it. We got divergence, right? And then boom, we get the trade. And you can see, look where it stopped at. 1.14500, and it pinged off of that. What? Look at this level. It grabbed liquidity, yesterday's low, also pinged off the level, and then we got back up to and pulled back, right here in this imbalance. And then, news was coming, accumulation, stop hunt, go, right? That's what you want to see, right? So I'll get one more example. We'll get one more really good trade set up. And then I want a really good one. You can see here, okay? You can see here. Let's do this. I really want a really good New York setup. Okay. All right. Let's just say you can see here that we're moving up. Okay. We're moving up from here. You can see here that we accumulated, we moved up in London. I know I need to probably come back, but you can tell me come back some. Let me go back probably another 5 days. Okay, cool. So it was in London. Okay. So I want you to pay attention to accumulation. We rose, we're moving up, right? Moving up. You can see, what did it leave? What did it leave inside of the middle of London and Asia? Okay. You can see that it left it in balance, right? That's what you want to see. That's what you want to see. So it left it in balance. You can see the wick come into there, right? You can see the wick come into there. Now, sometimes, guys, quarter levels. So you got 50s, double zeros. You got, some people use 20 level and 80 level. Other people use 25 level and 75 level. I like to use the indicator that I'm going to show you as 20 and 80 levels. And ICT talks about in his stuff 20 and 80 levels. But you can see here, as we're moving up, we can see that we got liquidity up top, right? But let's pay attention to the level. So we got imbalance. We come down. Let's go 17th October. Let's mark this up. I want to make sure that we got a solid sharp fin on that. 7. Wow, the trade's gone. Wasn't the 17th? Let's see here. Yeah, 17th of October. Let's go to 5. It's not showing me. Okay. We'll look at another setup. We'll look at another setup. Okay, let's do that. Let's look at another setup. Let's go to USD CAD. You can see here, look, one click of a button, off of the screen. One click of a button has a 20 level, double zeros, 20 level, 80 level, 50 level, 20 level. You see what I'm saying? It's that in one click of a button. So if let's just say you're in current price and you wanted to click it on, look at it real quick. Look at this cell on USD CAD, right? Boom, we hit the 20 level, the smoke down, comes back, hits it, feels the imbalance, drops again. Look how it's setting up on the 50 level, drops again. Okay, it's pinging off the 20 and the 50 level. Boom, 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 boom. Okay, look how it rested on this 80 level, pinged off the double zero today. Okay, so this will help, especially when there's a solid setup getting ready to, be there, right? So you can see, I'll get this off, and I want to look at a real good setup, like so obvious that, let's look here. Okay, cool. This one right here, or this one right here will work, right here. So you can see that we were clearly moving down right here, right? We were clearly moving down right here, from here down. Okay. You had, let me get my levels here. My timing, I'm sorry. Let's go back 30. See if it'll make it. No, we did not. Edit. Let's go 45. There we go. Cool. So you can see that we're moving down. I'm going to put some lines right here. We had liquidity there, top of Asian, right? We had London smoke a low, okay? We had London set a low, okay? So we're in a box. Now when I'm inside this box, I'm back in Asian. Remember, I'm back in Asian. I'm back inside of Asian range when I'm coming into New York. So I'm just like, I'm waiting for a stop on it. So boom, you can see clearly, wham, we hit it. We get into New York. They send price up one more time, and you can see October 4th. Let's go look at that on the 5. I should click that every time that I do that. Every single time. I love trading with you guys. All right. It'll be worth it, I promise. Okay, cool. So you can see here, a left leg takes out right leg. We roll down. Okay. I'm not going to go to the 1 minute, but there was a fair value gap imbalance inside of this right here that we could it's right here, right? We could have waited for it to break the low and then pull back on the 1 minute and got into the trade. Cool. Or you guys know me, 13 EMA, close below, get into the trade. Okay. Because you've already got the stop hunt, you've already got the shark fin. The shark fin was on the 15-minute time frame. What else do you have? You got a little bit slight divergence here. Okay. All the way across the board. Actually comes all the way to here. Okay. Now you get the trade, but now let's bring this red line back up, even though it got liquidity taken right here. Look what price is at. 1.3650. And you can see that price played around on it, took the liquidity. That would give you another confluence. Okay, I'm at an institutional level. Pow, let's go. Let's go. Okay. So once you started going, you can see here that right here, look at this. You can either do 1.3580. Look how 1.3580 is right there. That could have been your first take profit, or it could have been 1.75, 1.3575. Look how price reacts to that level. Okay. Or where's the 50 level? Or I'm sorry, the double zero. Look at it. 1.3600. Okay. Look how price reacts to that level right here. Okay. Let's move across. Look how price, there's that 1.360. Look how price stops, moves away, runs through it, sets back up on it, goes away. Okay. So that is very valuable. Not only were you like, okay, so I'll take out London low liquidity. Okay. And once I take out London low, now I'm going to be like, okay, where's the next institutional level, which would be 50. Okay. 1.3550. Where's that at? Right there. Okay. Right there. And you can see how price played on top of it, right in the middle. And you could have taken your profit right there. And then you can be like, all right, I'm taking a partial, or go all the way back down. You can take it at a quarter. Look at the quarter level. There's 1.325, or you can do 20. Okay, there's 20. Look at price. Okay, now let's go to the double zero. Okay, there's 1.350. Look at price. Boom, 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 playing on it, playing on it, playing on it, and then leaves. Okay, let's see if it comes back to it. I don't think it does. But anyway, you catch the drift of it. You catch the drift. Like this is at an institutional level. Okay. It's at 1.3650. Let's go back up. There it is. Okay. You can see that it's set up on it. Okay. So after you get that, after you get everything, all your confluences, you can just be like, because at current price, you can click this open and then it'll tell you Then you can unclick it. Okay, we're at an institution level. That's another call closed. Let's take the trade. Okay, it's giving me everything else that I need as well. Okay, always know your direction. Always know your time. Always know that, you know, wait for liquidity to be taken. It's a lot better trade because they're doing things at that area. They're doing things with that liquidity. They're taking liquidity and then they're sending people the wrong way, and then they're going to make the real move. Remember, power three: accumulation, manipulation, distribution. Okay, accumulation. Okay, accumulation, manipulation, distribution. Okay, so after that, then when you're like, okay, I'm getting ready for it to set up for distribution, look at what level it's at, and it'll make the trade even sweeter. Okay. So that's it, guys. Like I said at the beginning, I'll show you right here, one click of a button. It tells you the levels right off the bat. Don't matter what time frame. Okay. Um, tells you the levels. You can go to mql5.com and get this indicator. Make sure you put UPD1X00, all caps, and you'll find it. Okay. One click of a button. That's the reason why I like this one, is because it's one click of a button. I can get it off my screen because I do not want that on my screen. It clouds the screen. Okay. So you go back to 15. You can see here. Look at the levels, guys. Look at price at these levels. I'm going to scroll back all the way out as much as I can because it ends up running out of data because of you don't want your computer to bog down. Okay. Look, look, look how it's reacting. As you see them price stop, I know, look how price stopped these quarter. I like the whole numbers in the 50. So it would be the gold and black line. I kind of get rid of the quarter levels so I can just read them off the top of my head. But you can see, look at price. Okay. It's not a myth. It's nothing like that. This is real. This is real stuff. Okay. So with that, guys, don't forget to like and subscribe. Don't forget to go to the Instagram, follow us there, ask questions, both YouTube and Instagram. Come follow us on Facebook. Go join that free Telegram so you can get free nuggets, free tips and tricks. And again, guys, don't forget, we're having Black Friday sale. It will end the last day of this month. So go and join that. With that, guys, keep pipping and dipping, and I'll see you on the next one. Peace.